Life insurance is one of the most crucial yet overlooked aspects of personal finance and financial security. As much as we like to control our destinies, unfortunately disasters happen that are out of our control, so today I'm going to walk you through the very best way to hedge against these kinds of unpredictable events. Specifically, I'm going to talk about why a life insurance policy should be one of the first things you invest in with your first paycheck, what life insurance covers, and the difference between whole life and term life insurance, two policies that you have to understand to make the best selection for your unique situation. Now, I'm also about to eradicate two myths about life insurance policies, so you'll definitely want to watch this all the way through. Hey, I'm Isaac, the finance nurse, and my goal is to get nurses and healthcare workers in optimal financial health through personal finance and stock market related content. So if this sounds like something you'd be interested in, please do me a favor and hit that like button and subscribe to the channel. Alright, without further ado, let's get into it. A life insurance policy is one of the most crucial investments you can make, and unfortunately one that most don't pay attention to until they have massive financial issues stemming from unexpected life events. This includes but is not limited to accidents where you lose your life. This important form of risk management will help you to cover the cost of your funeral, debt, tax, bills, not to mention even covering your mortgage, help with college expenses, and estate planning. Now, in 2021, only 52% of Americans owned a life insurance policy. However, 8 in 10 families have some form of insurance coverage. Insurance policyholders are predominantly the breadwinners for their families and want to make sure that they don't face any financial issues when they're gone. Different factors directly influence the premiums, such as age, gender, and health. The insurance company requires a medical exam before providing you with coverage. They may also require information about your driving record, current medication, smoking status, occupation, hobbies, and family history. Life insurance is a policy that guarantees that the policyholder pays a certain amount of money which later goes to their beneficiaries. You make regular payments throughout your life, and in exchange the insurance company will guarantee a predetermined sum of money to your family. A life insurance policy is an agreement with the insurance company. Once the deal is finalized, you will be called a policyholder that owns the insurance. This is one of the best ways to live a peaceful life, keeping in mind that your family won't starve or get buried under debt when you're not there to provide for them. Even if you don't have a family, you can pass this money along to beneficiaries such as your parents or siblings. Now, one of the biggest myths about life insurance policies is that if you're young and single, you don't need a life insurance policy. But even if you don't have a quote need for life insurance, policies are much cheaper the younger you are. You can even purchase a starter policy. Now, if you've been watching my channel for a while now, you know that I constantly preach risk management, whether that be hedging your 401k contributions in the event of a market crash or providing risk management strategies when investing in the stock market. When it comes to your life, however, life insurance is the best risk management strategy out there. So what does life insurance cover? So before we get started on that, I have a few key terms that you have to know before investing in a life insurance policy, and these are premiums and beneficiaries. The regular payment you pay to the insurance company is called premium, which you pay monthly, quarterly, semi-annually, or annually. The person who receives the benefit after your death is the beneficiary. You don't have to select only one person as your beneficiary, as you can divide the payments to many people. You can also choose to give that money to charity or trusted funds. Most policyholders choose to buy life insurance as a risk management strategy to help support people that depend on them. In the event of your passing, the death benefit includes your funeral costs, debt settlements, estate, mortgage, school, and college tuition of your children, and a lot more. The average life insurance premiums have been firm even after the pandemic. According to the American Council, the death benefit also rose to 15.4% in 2020. Now we're coming to the section regarding whole life and term life insurance policies. You have to understand the differences between these policies, as one will definitely be more applicable to you over the other. An important consideration when it comes to choosing a policy is your short-term and long-term needs, so keep these in mind as we start talking about these policies. The first one that we'll talk about is term life insurance policy, and this policy has two components, the death benefit and the premium. It provides coverage for a specific number of years, typically 5, 10, 15, 20, or 30 years, with a few companies offering 40 years of coverage. Now, if you or your spouse passes away within this time period or after, you will get the insurance policy's death benefit. For instance, if your policy is for $50,000, your beneficiaries will get this payout. The best part about the term life insurance is that it's very affordable. For a 30-year coverage period for a 30-year-old male in good health in Southern California, for example, your payments can be around $13 for a coverage amount of $100,000. Term life insurance has no cash value, so you won't pay premiums or invest any money. You have to set an amount to pay per month and then stick to that. For instance, if you pay $13 per month for the individual described previously, you'll get $100,000 in coverage. Term life insurance is an excellent way to replace your income or cover your debt. Another consideration when choosing the duration of your term life insurance insurance is the length of debt or situation that you want to cover. For example, if you have a 30-year mortgage, you might want to consider getting a 30-year term life policy to cover mortgage payments if something ever happened to you. Monthly premiums increase the longer you hold your policy for. Also, typically, life insurance for females is less per month than life insurance for males. Premiums are lower with term life insurance, so your beneficiary will be able to invest that money in the future or use it to pay off debt or complete their education. Term life insurance can also be converted to a permanent life insurance policy before it expires that will have living benefits, including an accelerated death benefit if you become terminally ill. But you are not required to give a medical examination again for converting, and no health conditions are considered. Undoubtedly, a term life insurance policy has several benefits, but there are some cons as well. One of them is if you're planning to renew your policy, it will be costly for you. If you're thinking, why would anyone go to renew their insurance policy for the second time? The answer is that some people find it challenging to get rid of their debt or have challenging financial issues. Even after their retirement, they have to pay off their debt monthly and may have little left over. If they are 50 or 60 and apply for the renewal of that term life insurance policy, it gets more costly than when they were in their 20s or 30s. The renewal policy is costly because you're in an age where you don't have a job, have increased risk for health issues, and have a decreased chance of living for the following 10 or 15 years. So the insurance company has no choice but to sell you an expensive policy. But if you earlier agree to a predetermined expiration for your term life insurance policy, you will not have the option to renew the policy for another term. The policyholder can also let the coverage expire, which means that they would just not be covered anymore and that the insurance is terminated. So next we come to whole life insurance. Now, let me know down in the comments if someone has talked you out of a whole life insurance plan because of how complex it is in addition to the high premiums. I know that when I told my coworkers that I was planning to get a whole life insurance plan, most of them told me not to get one and instead buy cheaper term insurance and invest the rest. Well, in this section, I'm going to explain exactly why I did not follow their advice and began investing in whole life insurance at the age of 23. Whole life insurance, or what you'll hear me refer to also as permanent life insurance, can be an important contributor to your retirement income. You'll always have a guaranteed amount of growth of 3 to 4% and will get guaranteed dividends with certain policies. Now hear me out. Let's say you have $10,000 in your savings account right now. You're losing money. Your 0.5% of an APR does absolutely nothing to keep up with sky-high inflation that is the hallmark of US economics in early 2022. Meanwhile, you have whole life insurance that offers guaranteed returns, often 4 to 5 times what you're getting from a traditional savings account, while not only covering you in the event of a personal catastrophe, but also contributing to your retirement plan. So we'll dive into the 3 components of whole life insurance: death benefit, premium, and cash value. The main thing that differentiates it from the term policy is the cash value. The insurance agent will sell you the plan as a savings or investment account. Now, when you pay your premium, which let's say for our purposes is $100 per month, a large part of that amount will go towards funding the death benefit for the first 5 to 10 years. These premiums will be going to the 3rd component of the whole life insurance policy, which is cash value. But the amount that actually goes in the cash value is not the entire amount that you paid, because a portion of the premiums will go to the commissions of the salesperson, which, keep in mind, is often up to a year's premium for selling a policy, administrative fees to run the policy, and the death benefit. There are many nuances to a whole life insurance plan, but in general, if you want to build cash value as quickly as possible, you'll most likely have a policy that will incur higher premiums. On the other hand, if you want your premiums to be low, but have the biggest possible death benefit, you'll most likely be placed in a policy that builds cash value slowly. Now, as an investor in the stock market for 7 years and counting, I found whole life insurance to be extremely appealing. The market is extremely volatile. Whole life insurance is not. Interest rates and dividends are locked in place. How many of you experienced the dot-com bubble or the 2007 to 2009 recession? Individuals invested in stocks lost fortunes. However, the cash value of a life insurance policy could have saved you big time in the event of a market crash. Those of you familiar with the markets would know that market downturns are not the time to be selling equities. Rather, you should wait for the market to recover before even thinking about selling. This is when the cash value comes in handy because it acts as an emergency reserve to protect you from having to sell your assets just to survive. Better yet, you don't have to pay any of this money back and no fees are incurred. Just beware though that one of the caveats is that the policy's death benefit can be reduced accordingly if you die before paying it back. If the guaranteed returns and emergency fund benefits weren't enough, well, I've got a benefit that will be sure to pique your interest. In honor of tax month being right around the corner, let's talk about the tax benefits associated with your whole life insurance plan. The cash value that you accumulate grows tax deferred. If that wasn't enough, the death benefit that goes to your beneficiary is non-taxable. Whereas you'll be paying taxes when you pass on real estate to your beneficiaries or withdrawing money from your 401k, this insurance plan guarantees that you won't have to pay taxes on anything. Also, let me slip in a shameless plug for a Roth IRA because just like whole life insurance plan, it is funded with post-tax dollars but can be cashed out tax-free. Now, there are obviously some considerations with a whole life insurance policy. Firstly, you have a lack of investment control as your insurance company will invest the money you contribute however they choose. That's why you'll hear a lot of people telling you to buy a term policy and invest the rest, which obviously assumes that you'll make a larger profit investing on your own. However, I view it more as a low-risk, high-interest savings account to supplement my stock portfolio. Whole life insurance is also more costly compared to term life insurance because a lot of your premium goes to fund the cash value of your account, which again is why I like to treat whole life insurance as a glorified savings account. It also has a smaller death benefit than a term policy, so this is a consideration especially if your family is dependent on your income. So by now you should have a pretty good understanding of what life insurance is and why it is important. I want you to consider your current situation as well as your financial goals. Who depends on you? Who would be financially responsible for your funeral expenses and debt in the event of an untimely death or progression of a terminal illness? Like I mentioned before, life insurance is so far one of the best forms of risk management that will guarantee the welfare of your family or those responsible for you. Now, when it comes to which life insurance to buy, whether it is term or whole life, my recommendation is actually to buy both, but I want you to decide that for yourself based on what you learned today. Anyways, I hope that you got a lot out of this video, and be sure to give this video a like and subscribe to the channel if you would like more content just like this. I look forward to seeing you in the next video. Peace.